because this has been your focus, but people who don't get it would think when their advisor says to them, "Yeah, you have exposure to metal now in SLV or PSLV." Let's kind of break it down a little bit. First and foremost, PSLV and SLV are very different. Um, PSLV is what's called a closed-end fund, and SLV is what's called an ETF or a proxy, if you will. The closed-end fund means it's more like a stock and less like an ETF. You're eligible for capital gains instead of the collectible rate that you are in SLV. But more importantly, it is, if I'm going to buy anything paper, I would buy PSLV. It's administered by Sprott. The metal is held at the Royal Canadian Mint, supposedly backing all of the shares that are issued. And redemption is allowed, but the redemption is in 10 1,000-ounce silver bars minimum. And so you're taking possession of 10,000 ounces and 1,000-ounce bars that are really, it's not a practical way to hold it. SLV is probably the worst product ever made, in my opinion, and along with GLD. Not only is it administered by JP Morgan and BlackRock, JP Morgan, who paid a $920 million fine to the Justice Department for manipulating silver, is still allowed to run the world's largest silver trust in SLV. Brokers who used to be called stockbrokers, now they're money managers. And stockbrokers made money on every trade that you made. Now money managers keeping your money under their umbrella of management is priority number one because they make a percentage of it. So when someone comes to them and says, "I want some gold and silver in my possession," they'll say, "Listen, the storage and the risk and all that stuff, you'll be better off just buying these ETFs and PSLV and GLD and their Sprott's gold trust is PHYS. You should own this stuff, and now you'll have the exposure to the metal without the risk."
That's
Um,
why I always see these stupid ass articles of people trying to convince the reader of why it's better. And I always like there's like an ulterior motive here. Like
Sure
clearly
it is.
what they're saying they don't mean. There's a reason why they're pushing you to go this route because that route doesn't make sense. Now, okay, you just broke it down brilliantly. Okay.
Well, but it's deeper than that, and I think there's maybe even a deeper ulterior motive. Maybe the government at some point figured that the road that they were heading down was unsustainable, that ultimately the math breaks the system. Mathematics is the purest of all the sciences, and it always works out. And you get to a point where you're at a crossroads. So they know there would be a much bigger drive into precious metals. So they develop, let's say, GLD and SLV. GLD is held by HSBC Bank, probably paid more fines for market violations and trading and drug money with the South American drug dealers and LIBOR and all of these things. And JP Morgan, I mean, need I say more, $920 million fine for manipulating the metals market, yet they're running the world's largest silver trust. It's the largest stockpile of silver in the world and the fourth largest stockpile of gold. If they ever needed to confiscate gold and silver again, going door to door to people like you and I, and many of which who believe in the Second Amendment, is not practical. The amount of patriotism that's out there is not what it once was. So instead, you have all of this metal held in a central location by the cartel criminal banks who manipulate the market anyway. So they could come in on a Friday night, take SLV and have the largest stockpile of silver in the world, take GLD, have the fourth largest stockpile or fifth largest stockpile of gold in the world, and look the world in the face and say, "What? We didn't do anything. We didn't confiscate gold the way Roosevelt did. We didn't activate eminent
Right.
domain. We closed these two accounts. You can still own it if you want
And
physically, but we just closed these, and all the money that you had in those accounts are now in your money market as
right,
of
it's
Monday morning."
justified.
It's
Yeah,
justified, and they don't break any laws or infringe
yeah.
civil liberties. But you know, the whole thing of it is that these advisors who keep you under management by, that's how they make their money. If you take $1 million out to buy gold and silver, that's going to cost them $10,000 at 1%. That's 10 grand you just took off their plate. And so that's how these advisors make money, and they're incentivized to tell people, "No, don't do that. Buy this." If I had to buy a paper product, without question, it would be PSLV or PHYS, which are the closed-end funds run by a reputable man, or he's not really involved anymore. Sprott, it's a publicly traded company, but never heard anything bad about it. GLD and SLV are two of the worst products I've ever seen in my life. And if you don't believe me, open up the prospectus. In GLD, the pages are 6 through 12. I don't know in SLV, but it's called risk factors in the prospectus. Read the risk factors, and if you don't sell it and immediately after you read it slowly, maybe read it twice, I think I'd be shocked. You'll find the like in GLD, it says things like the custodian, which would be JP Morgan, reserves the right to employ sub custodians. Their JP Morgan or the custodian is not it's not permitted for the custodian to view the premises, the storage facilities of the sub custodians, nor are they responsible for the errors and or omissions of the sub custodians. And if indeed the gold bars do not meet London good delivery standards, like a 400-ounce good bar, it is not the fault of the custodian, it's of the sub custodian. And if fraud is detected within the GLD, then the account is frozen, an investigation ensues, and upon resolution, you will be paid the share price at the day the investigation was initiated or the fraud was discovered. So there could be fraud tomorrow, and then they freeze the market, and then gold goes up $10,000 in the next 2 years, and you get paid at the value of the day that the fraud was discovered. There's a million things that are in these accounts that are just designed completely and totally. If those bars don't meet London good delivery standards, if they're lead bars painted gold, it's not the fault of the custodian. So this prospectus is fugazi, and it's a horrible way to own precious metals because you really can't take possession of it unless you are in SLV and GLD, unless you are what's called a authorized participant, and the baskets that they fund are, millions and millions and millions and millions and millions of dollars each. So it's designed for the big money, the commercial banks and whatnot, to pull stuff out, but for you and I, the peasants, ain't gonna happen. And we're talked into owning it because it's an easier way, cleaner way of owning metals, so we're told. But really, it's just a derivative of the real thing. I say to people, if the shit hits the fan, do you want boxes of Frosted Flakes or stock in Kellogg's? So, and besides, the only
Ooh,
real
I like
you
that.
you make money on PSLV or SLV or PHYS or GLD by the price of gold and silver going higher. You don't make it based upon supply demand. And that's another example. So if we look at what we saw over the last 4 years, where premiums were crazy high, like Silver Eagles, $11, $12 premium bid, we'll buy them from you. You'll never get that with the ETFs. They're just measuring spot, but it doesn't take into account the premium associated with owning the physical. There are a lot of reasons to not own it, and I wouldn't own those to save my life. I think if I had to, it would be PHYS and PSLV. I would never own GLD and SLV. They are two of the worst products ever created, and in my opinion, are the tools or the vehicles of confiscation should it ever happen. Because going door to door would not be smart these days. But having the largest stockpile of silver and the fourth or fifth largest stockpile of gold held by the criminal cartel banks in vaults with a pink bow wrapped around it would certainly be a lot easier and give the government the ability to have their cake and eat it too.
Wow, I really am glad that you just mentioned all that, because I just learned so much. Like there's so many things you just mentioned that I think are extremely important. And I've seen that so many times. I'll be covering an article where it just seems like they're either misleading the readers or purposely, shifting the narrative into something that just you could just tell they're not being truthful. And I try to rip those articles apart because they clearly, have some type of motive behind what they're saying. And then if someone's not who doesn't watch my channel reads that, they'll believe that person and they'll start forming their own opinions off of someone who is just completely misleading them. So,
Well, it's
it
interesting too. In the last couple of weeks, I have had three requests from CBS News to talk about physical gold. Yesterday, they sent me one from Market Watch, and it was just two questions I wrote on, and one was, well, actually, let me see what it was. I'll tell you exactly. It was if you're buying physical 1 ounce gold bars for the first time, what are some of your tips for what you do before jumping into the purchase. Question number two, how can a beginner investor determine if buying physical gold is right from them for them? And they just sent me another one today. Three questions. One, do you think the price of gold has peaked for 2024? Or do you think there's potential room for growth later this year? What should new investors know when trying to determine if gold's price will rise through 2024? Is gold a good or bad investment right now, or why? And so I don't know if they are starting to acquiesce to the reality or not, but I find it interesting. In all the years I've done this, these companies didn't come calling or asking any questions at all, and now you're seeing there is an interest in it at least, and maybe that's a step in the right direction. But yeah, most of these financial advisors, because of the way the system is set up, they learn more and more about less and less till they know everything about nothing, and they're focusing singularly upon a strategy that doesn't offer any ability to get free from this financial matrix, which I think the removal of counterparty risk and getting out of the system is a huge benefit that's not talked about enough. um, that's that to me is one of the real benefits of holding metal in your own possession, and which in and of itself is better than GLD and SLV.
You were on Kitco News twice in the last couple of weeks, right? With Michelle McCory?
Well,
Two
we
times, or
originally
was
had a 45-minute interview, and we ended up talking for almost 2 hours. So she broke it into two interviews. So it
okay,
was one long day done
okay.
that she broke up into two interviews.
Okay. Um, so many people say that you are everywhere on YouTube now with shorts. They say there's now channels that are taking clips of you and putting like an AI voice behind it, and just like you're just like flooding YouTube's algorithm, which is a good thing. Some people don't like it because they're like, they think it's like, I don't know. I think it's good. The more you're out there and the more exposure you're getting, and the stuff you're
I
pushing
can't
is,
control
yeah.
that because there's way more videos out there than I've ever done. And
Yeah,
it's those people that are doing that and monetizing their channels.
yeah, yeah. By the way,
I'm sure YouTube knows who I am by now.
oh yeah, this is our 32nd episode. Isn't that crazy? We've done
Time flies,
32.
man, and
Yeah,
it's been a complete joy getting to know you. I consider you a friend, and there are very few people in this industry that I hold in the same respect and regard as you. And it's an honor to come on your
yeah,
show. But oftentimes, even the stuff you and I do, they will crop that, put an AI voice behind it, and
yeah.
different music and whatnot, and bang, they got a they
Right.
monetize the channel. They're getting click
Yeah.
money.